Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. On Monday, markets were closed for the Labor Day holiday. On Tuesday, the PMI manufacturing index for August was down 0.1 of a point to 50.3, and the ISM manufacturing index for August fell an unexpectedly sharp 2.1 points to 49.1. Construction spending for July edged 0.1% higher. The weak manufacturing data plus new 15% tariffs on Chinese goods that took effect last Sunday led to a sharp sell-off, with the Dow Industrials closing 285 points lower and 10-year Treasuries yielding 1.47%. On Wednesday, the Federal Reserve released its Beige Book and described consumer spending as mixed and manufacturing as down slightly. Overall economic activity was described as modest. Carrie Lam, Hong Kong's chief executive, said she would withdraw a controversial extradition bill, and markets rose, with the Dow Industrials finishing 237 points higher. On Thursday, the ADP employment report for August estimated that private payrolls will rise to 195,000, stronger than expected, and jobless claims for the week ending August 31st rose 1,000 to 217,000. Productivity for the second estimate of the second quarter remained unchanged at 2.3%, and unit labor costs rose slightly to 2.6%. Factory orders for July rose 1.4% on top of the prior month's 0.5% gain, and the ISM non-manufacturing index for August rose 2.7 points to 56.4, much stronger than expected. The U.S. and China agreed to resume trade talks early next month, and New York Fed President John Williams gave a speech in which he appeared to agree that another rate cut would occur soon. Markets soared on all the good news, with the Dow Industrials closing 372 points higher. On Friday, non-farm payrolls for August were up 130,000, lower than expected, and the unemployment rate remained unchanged at 3.7%. Average hourly earnings rose 0.4%, slightly higher than expectations. Markets opened mixed on the news. Now let's take a look at some stocks. Palo Alto Networks reported its second quarter results after market close on Wednesday, coming in with earnings of $1.47 per share and revenues of $805 million. Palo Alto witnessed its revenue increase by 22% year over year, primarily driven by growth in its subscription and support segment. Initially, Palo Alto shares fell by 6% despite beating analyst expectations. However, on Thursday morning, shares opened 5% higher. Slack Technologies reported its second quarter results after market close on Wednesday, coming in with an earnings loss of 14 cents per share on revenue of $145 million. In addition, the workplace messaging app reported a weaker guidance, setting shares 15% lower. At the end of the quarter, Slack reported that it had over 100,000 paid customers, an increase of 37% year over year. Cloudera Inc. announced its second quarter results during Wednesday's extended trading hours. The enterprise cloud company reported stronger than expected results, sending shares soaring by 14%. For the quarter, Cloudera reported an earnings loss of 2 cents per share on revenue of $196 million. Cloudera's stronger revenue growth was primarily driven by its subscription segment, which reported revenue of $164 million compared to $95 million a year ago. Lululemon Athletica reported its second quarter results after market close on Thursday, with earnings of 96 cents per share on revenue of $883 million. Total comparable sales increased by 15%, and direct-to-consumer revenue increased by 30%. Shares were up 4% on the news. CrowdStrike Holdings reported its second quarter results during extended trading hours on Thursday, coming in with better than expected results. However, shares fell by 8%. CrowdStrike reported an earnings loss of 18 cents per share on revenue of $108 million, with a 94% growth in revenue year over year, primarily driven by its subscription revenue. During the quarter, the company added 730 net new subscription customers, totaling 3,789 customers. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.